All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, everybody. All right, so what goes up must surely come down. Now, if you caught yesterday's episode, then you know that we were singing gold and silver's praises as silver zoomed past the $25 an ounce level and gold broke above its 50-day moving average. But today, it's a completely different story. And I was a little hesitant after seeing yesterday's moves, but today's drop in price, in my opinion, was definitely from what's known as institutional distribution, aka traders selling at firms. Now, I'll explain all this shortly, but let's start off with some economic news. Okay, so as the overall market began sniffing blood from the suits on Capitol Hill, markets began dropping, and overnight Dow futures were a bit lower. And as you can see from the headline here, the Dow dropped 150 points this morning. And just as I said yesterday, and feeling like we were all kind of being led on here, the markets reacted similarly by taking some risk off the table. Now, there was some general positivity in the market reacting to initial unemployment claims this week, dropping to its lowest level since March. Now, the Dow pushed up to 28,200 at the end of the pre-market after noting that claims dropped from 842,000 to 787,000. It was actually expected that claims would rise as well. Now, however, after the market hit the opening bell, good existing home sales wasn't enough to keep the market elevated as intense selling began. Now, as I was, pretty much creating this video, Nancy Pelosi was additionally reported as saying that it could take a while to get things passed because they actually have to write and vote on the bill. Now, I'm telling you guys, this is all smoke and mirrors, and I have to shout out one of our viewers here named Apollo for catching the political games that's going on right now to keep the markets elevated. But let's bring this all back to gold and silver. So as you can see here, both gold and silver they both have been having a pretty rough day, as I mentioned earlier. I do believe that institutional distribution was behind a lot of the downward momentum today, as evidenced by what occurred in the overall market. And as you can see here, gold and silver dropped in tandem with the overall market just after 10 a.m. when the Dow Jones began to sink lower. And both metals bounced back after Pelosi came out to say that Congress was just about there, quote unquote, on closing in on the deal between the Democrats and the Republicans. Now, earlier we find that there was much heavier selling that occurred during the pre-market hours, specifically around 8 a.m. And I still think that the main culprit here were traders taking profit from yesterday's gains. Let's take a look here. Here we have SLV. Its movements match lockstep with spot, obviously, but we find that around the 1020 area, this candlestick right here, the sell-off has been, is demarcated here by this large red candlestick. But guys, back to the pre-market again with thinner volume here, you can see that before we got the news about the initial unemployment claims at 8:30, silver began to sell off here a bit. Now, hold on, guys. I actually have to take a quick sip from my coffee in this very nice junk silver mug here that I designed. Now, if you're a firm believer in keeping some junk in the trunk when things hit the fan, then you can support this channel by getting your own monetary metal mug. The link is in the description below. But going back to analyzing here, let's look at GLD. GLD, similar to SLV, had a similar approach again at 10.20. We had some sell-off. We had a sell-off here, but at 8.10 we had a sell-off in the pre-market as well. So very similar moves, but just not as drastic as it was for SLV. Now let's bring it back to the moving averages here, because there's something that I also need to drive home when it comes to this institutional distribution. So here we have the 50-day moving average, and this is for silver. Let me go to gold first. So as I mentioned before, yesterday we broke above the 50-day moving average, and once we did that, to me it was almost a no-brainer that we would kind of head back down. Because one of the things you have to realize is when it comes to, these institutions, they have these computers making many of their trades. Now, the positive side to this is, within the markets, is that it makes moves pretty predictable because they're written by algorithms. So, check out gold's movement against the 50-day moving average resistance level. It broke above. And again, one of the reasons why I was hesitant to be singing its praises for too long was because I knew that some selling was going to be happening soon because of take profit behavior settling in. Also, and this might be a little bit harder to see here, but one of the things you also have to take note of is that the highs that it hit yesterday were almost similar to the most recent highs that we had prior. Now, that's a psychological resistance level that was likely noted by, again, these computers. And as it approached, or as the spot price approached those previous highs, again, likely another incentive to take profit. Now, this isn't just for gold, also with silver as well. Now, silver didn't break above its 50-day moving average, but again, it did get pretty close to that psychological level, and it began to sell off right after. And overall, guys, pretty much to sum it up, I pretty much think our emotions are being played with right now. But after the election has passed, I'm hoping that we'll start to see some more interesting behavior from the markets, as opposed to this consolidation period that we've been in for pretty much a little bit over 2 months now. But thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion with goldandsilvertoday.com, and we also have it back here.